Foreign commercial property investment falls. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I have my morning stein of coffee. I thought we'd have a look at this article from realestate.com.au discussing foreign commercial investment in property and how it is dropping or on the decline. Now, commercial property, it's an interesting part of the property landscape. I'm questioning whether the demand for commercial office space will remain at pre-pandemic levels, considering people will get used to working from home. I was talking to a neighbor. In some regards, he's happy that he doesn't have the commute, but in others, he misses the alone time. Being able to just put something on, sit quietly 45 minutes without the kids and the wife. So there's two sides to it. I guess that's if you're doing a train commute as opposed to driving, although you probably could in stop-start. But it's definitely something to consider, the impact and the demand on these spaces. If there is a sudden drop-off in demand for commercial property because people are used to working from home, let alone the fact we throw a recession on top of that, there will have to be some competition between people in the lower quality stock, in the B-grade stock, to try and get people in, to try and get tenants in. If we jump over to the Property Council's data room, let's just have a look at some of the, office buildings here. We'll have a look. And just some of the vacancy rates, because I think it's quite interesting to see. You can see here, this is overall Australia. In the last recession, we had quite high vacancy rates that lasted for a while, for a significant period since the last recession. That's very evident in Melbourne, quite evident in Sydney, and not evident at all in Canberra. Maybe they didn't have any offices in Canberra in the 90s, Government wasn't as big, I'm sure of it. So you can see this recession is going to have an impact. But then one big difference to back in the 90s is working remotely is possible. I'd say you could work from home there, but you couldn't really have a remote video conference meeting from home back in the 90s, back in the early 90s. Not any normal people, not a person who can barely work a computer could do it. So let's have a look at this and see if foreign investors are still drawn to Australia, still keen on our commercial property and what that might have in that sector. Foreign investment in the commercial real estate sector has dipped significantly since the pandemic, but it's not necessarily for a lack of interest, according to industry experts who believe that Australia and New Zealand are well positioned for a rebound in foreign investment after the pandemic. I'd like to see why we're well positioned. Is it just because compared to other nations, we seem like a much more attractive option? If you compare the damage that Australia's economy has received from this economic lockdown, and we've seen the first negative reports that hasn't really put it out there, but we're not looking as bad as some of the others. We're not nowhere near the social unrest as the United States is having at the moment. The latest RICS Global Commercial Property Monitor showed that foreign capital inflows into the Asia-Pacific region dropped by more than 40% in the first 3 months to 2020, with the Canberra, Adelaide and Gold Coast markets hit particularly hard. Well, there'd be secondary markets, particularly the Gold Coast down there. So we can see here the net balance. There's Newcastle, Perth, Wellington, Auckland, Brisbane, and Melbourne are doing okay. Everyone else is down. Christchurch is slightly up. Adelaide, Gold Coast and Canberra in Q1 and Q4. But Dexus's general manager of research, Peter Studley, said those figures didn't gel with what he had been experiencing on the ground. Australia was particularly well positioned for a recovery in foreign investment, but once the pandemic was over, he said. Foreign investors we are talking to are still quite keen on Australian property, and in particular for office and industrial assets in major city locations. Mr. Studley, who was speaking at an industry briefing on Wednesday, said. Okay, so that's interesting. I can see the demand for industrial assets, for logistic investment, and I guess if they still want office. The reason they liked Australia, in the first case, have been amplified. We are a stable economy, strong population growth, and the way we weather the virus as well. and we seem to be coming out of it, or at least stabilizing the infection rate and lifting mobility ahead of some other countries. I think that's probably going to make us more attractive to foreign investors than less. The question of our population growth. Now, that's something that, well, majority of our population growth has been through migration. Birth rates aren't just meeting it. Our natural increase isn't at the levels that we need. Now, migration is going to take a huge hit. You've got a lot of people arguing that demographics are going to save the Australian property sector, that we have people coming in and that's propping up our sector. The government's probably going to turn the tap on to bring as many people in as they can to prop up that sector. Will that continue? Will the assumptions continue? Or, compared to other nations, are we still looking a lot better? You know, our population growth is definitely better than Japan's, isn't it? And some European countries. So it's a similar story in New Zealand, where beyond Auckland, smaller markets such as Christchurch have been emerging as foreign investment hotspots before the pandemic hit. We still expect to be getting similar sentiment from international investors when they're allowed to visit New Zealand a little bit more. They're definitely keen to get back into what they were doing. There's still a lot of money that's looking for a home, and with the low interest rate environment, trying to connect that low interest environment with higher yielding assets is definitely of interest. So here's the thing. On the global stage, we have this artificially low interest rate everywhere. You've even got some civilizations, some nations that have a negative rate, which seems quite unnatural. So that's going to essentially push demand. We're seeing here push demand for physical assets. Even if you lose some money on your physical assets, you're going to have the physical asset, and the loss may be less than the interest charges that you have. Mr. Studley attributed the drop in transactions both by domestic and foreign investors in the Australian market to a wait-and-see approach, as investors weighed the impact of potential rent reductions on an asset's return rate. Well, yes, you're going to see that. There's going to be a huge, well, not a huge, but there's definitely going to be a hit in the need for office accommodation. We'll see how that manifests in the value of some of these things. It's a complex story. We've seen an overall drop in transaction volumes in the past couple of months. And I think that's because buyers are becoming more cautious and sellers have too, for that matter, just trying to assess the impact of the current environment on their income line. The majority of respondents in the latest RICS Global Commercial Property Monitor, most of whom are valuers accredited by RICS, believe that Australia's commercial property market is in a downturn. So they're all bearish, the majority of Australian respondents. So we can see here, downturn in Sydney, Perth. So downturn, bottom, upturn, peak. I'll just zoom in there to see that. So you can see Sydney, Newcastle, Melbourne. Yeah, everyone, 63% think that we're in a downturn. Only 8% think we've hit the bottom, guys. We've hit the bottom. How's this going to affect real estate investment trusts that are primarily in the commercial sector? Maybe there'll be more demand for that Canberra property that seems to be resilient to tough economic times. Some 63% of respondents said the market was in a downturn, compared with 16% who believed it was in an upturn and 12% who thought it was at a peak. The Newcastle and Gold Coast markets were thought to be the most likely to experience a downturn. And for those of you that aren't aware, Newcastle and Gold Coast, they're both kind of satellite cities away from Sydney and Brisbane, respectively. The Gold Coast, you can commute reasonably easily. It's a 1 hour drive. I used to do it. I don't know if you could people commute from Newcastle, guys? I guess from a long train ride, it'd be a nightmare, but I'm sure some nutters would do it. To Sydney, I'm saying, not Brisbane. The survey responses were collected between the 10th of March and the 16th of April, when a number of states were beginning to introduce lockdown rules. And we'll have to see, guys, how all of these restrictions, now that we've had the public protests, will be affected. If we don't get another spike, or if we do, that's going to be in some ways, a good test to see where the economy will head next year. So, what do you all think? Do you think foreign investment will jump back in? Is this just a wait and see? We'll have to keep our eyes on it. What are you doing with your investment plans? Are you sitting in some commercial REITs, real estate investment trusts? Do you have commercial property that you're sitting on? Let us know what your thoughts are. Thanks for watching, everyone. Please like, share, and subscribe to the channel. If you're a fan and you want to support the content, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. I'll see you in the next video.